Daily income trade alerts at noon Eastern. This is our current trade allocation per $75,000. We have 54% in equities, 38% in bonds, 8% in gold, with a target income of $750 per month per $75,000 invested. Your trading schedule is to trade the SPY ETF Monday, Wednesday, Friday, taking advantage of 3 option expirations per week. The rest of the portfolio we trade on a weekly basis because they only offer weekly options. Emerging Markets ETF is traded Tuesday at noon Eastern with a 2-to-1 ratio against the SPY. And then the TLT, that's your 20-year plus U.S. Treasury Bond ETF, and GDX, your Gold Miner ETF, also with a 2-to-1 ratio, are traded on Thursdays. Now, we're not just buying and holding equities like a sitting duck getting ready to be shot. No, we have option callers protecting our positions. This makes it very hard to lose money. And even though our average return is 1.35% per month, the better news is that the biggest loss we've had in a single month is negative 1%. And also, in a 90-day stretch, we've never lost our clients' money. So click in the description box below to sign up for our free educational webinar this Thursday at 2 Eastern. So it's right in the description box. It's free, and it does repeat every single Thursday. It's about a two-hour presentation I put together about how to predict the markets, the big macro picture, and more importantly, how to use the options market to turn your portfolio into an income machine for retirement. Now, I want to point out it's not just about generating return. It's about generating return with low risk. And I want to point out how well we've done against the S&P 500 when you compare the maximum risk against the maximum return. So the S&P 500, if you had held it through December, gave you a 14% loss. Our portfolio made 1%. Now, in January and February, we underperformed the S&P 500, but that is part of the design of our strategy. Look at May. All of a sudden, the market sells off 7%, and once again, our portfolio performs with a 2.2% return. How does that work? Well, when the SPY goes down, the TLT goes up. That's the magic sauce right there. August, we got surprised from Trump where he said we're going to have tariffs. That's after a month before where he said we weren't going to have tariffs and that we had a trade deal. So in July, I was actually predicting an escalation in the trade war, and we got the opposite. So we had a small loss in our portfolio. And then in August, I was completely blindsided. I thought we could take the Chinese and Trump for their word finally. But oh no, tariffs rose, and luckily our TLT position provided that insurance to the portfolio that we needed once again, and we delivered profits. Our simple 4 ETF portfolio is extremely diversified and all you'll need for your retirement. Our goal is to generate income and safety, not growth or speculation. So you can simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. Now call Dean today to reserve your spot at 505-322-7515, and he can save you 60% on our annual membership today only. So a quick look at our disclaimer. Feel free to pause it or visit the website for the full details. Let's take a look at today's actual trade alert. And I will start off by just reading a testimonial that just came in. Hello, Dean and Jason. I hesitate to send this info because I'm really just getting started with this program and having some challenges. I need to get a better phone to enter the orders on the go, and I don't always have a great cell service when I'm away from my desk. I was unable to trade every day that an alert came out, but anyway, summarizing, he's grossed $5,737 profits in 3 weeks. Not too shabby. Okay, let's go up to our trade alert from the top to the bottom, and then we'll jump into the top news. And hello, Tom, how's it going? Okay, so in our portfolio, we've had a win on the SPY ETF, in 6 of the last 8 trades, bringing in a profit of $6,976. If you did get my text message alert, I'm actually expecting a sharp sell-off in the equities market, so we've dramatically tightened that option collar, so we have very little to lose on the downside. Today's trade will continue to benefit from the melt-up we're experiencing in equities, but again, I'm expecting some very bad news, and Trump has pretty much signaled to us that there is trouble ahead. Number one, he tweeted about massive bailout for the farmers coming. 2, he had a private meeting with Jerome Powell, presumably to discuss that he's going to escalate the trade war and wants him to lower rates and print a lot more money. And then 3, we're starting to see that the Chinese want a bunch of tariffs rolled back and perhaps don't even want a trade deal at all. So it looks like whether Trump wants a trade deal or not, I don't think he's going to get one. The Chinese would rather have Michael Bloomberg or Joe Biden as the next U.S. president, as they are very pro-China. Okay, so let's look at today's trade alert. And again, our TLT is what I'm expecting to deliver the bulk of our profits for the next 30 days, most likely as soon as this trade war escalation occurs. Okay, so let's take a look. The SPY ETF from Friday through today went from 311.14 to 311.90 for a gain of 76 cents. We had to give back 32 cents of that profit for our option collar. And that's really important because we've seen the SPY pull back $5, $10, $20, even $30 in a short 72-hour window. And most of those drops happen overnight. They gap down, so you don't even have a chance to sell. The way we trade, we have a put option right below the strike at all times. So our maximum loss is highly limited. And so this does mean we give up some of the profits on the upside, but you're going to see it. The longer you follow our program, you're bulletproof. You're not going to see substantial losses ever because of the uncorrelated assets plus our option callers. Now, if you do go to your email, there's links to all these trade alerts. I welcome you to go click on each of them and read them, and you can see all the profits we racked up. Also, on October 28th, we predicted the SPY would hit 315 on hopes of a trade deal, and if there really is a trade deal, that it could go to 330. So at this point, I'm highly skeptical of a trade deal. And we'll look at all the bad news coming out about the economy as well as about the U.S.-China trade deal. The next part of your trade alert gives you a summary of our open positions on the other pieces of our portfolio. That's emerging markets, the EEM ETF, the 20-year plus Treasury Bond ETF, TLT, and then the Gold Miner ETF, GDX. So currently, we're about flat on emerging markets, which was alarming last week because the SPY was rocketing higher while emerging markets was really kind of slacking. So this does signal to me that there's a bit of pessimism around China actually agreeing to any terms. TLT is only down 3 cents, relatively flat. And again, the TLT tends to trade relatively sideways most of the time until the bond market jumps on it in terms of expecting bad news or actually getting bad economic news. And the big picture with the TLT is that the world has so much debt, in fact, over $200 trillion of debt, a mind-boggling number. They have to just slowly lower interest rates to give investors the perception that the value of their bonds will go up over time, because the yield that these bonds are offering are lower than the inflation rate. So there's no point in just buying and holding these bonds. So not just the Fed, but all central banks are in quite a predicament. And until inflation really starts to perk up, I do suspect we can be long the TLT for quite some time. Now add in a trade war and the TLT is going to zoom up very quickly. Gold at this current time is correlated to TLT. I expect it will have a longer rally than the TLT. My expectation for the TLT is up to 2 years before we get towards that 0% on the federal funds rate. And at that point, there's really no more ability for the Fed to make investors think if they buy and hold these bonds that they can appreciate in value. So the TLT's days are limited, but perhaps if the Fed can slow down how quickly they reduce interest rates, this could be maybe up to 2 years. Now, just in the last 6 months, we've dropped it 75 basis points, which is about a third of the total move down they can do. So at this rate, we would run out of room in the next 12 months. So hopefully they will slow it down. Otherwise, the bond market's going to crash much quicker. But with that said, if we do escalate the trade war, I would suspect we get a rate cut in December and perhaps another one in February. So that would really expedite this timeline and make things very difficult for governments who are creating deficits and need some way to fund their huge spending. Okay, so gold will most likely go past the rally on the bond market. So I suspect gold will be our longest position to buy and hold with this option collar protecting it. It's up 5 cents today, nothing big. I will loosen our option collar on GDX most likely this Thursday, as I do suspect that the trade war is getting ready to ramp up. And good afternoon, Ron. Thanks for saying hello in the chat. Okay, moving along, here's our breakdown. We did pick up 0.1%. We were down 0.5% on Friday. The reason for our loss in November so far was a 99th percentile pullback on the TLT, which we've been making back on the SPY. Now, I think it's time for a reversal where the SPY is going to have a pullback just purely from the momentum and all this profit taking that people will want to book into their portfolios. When we take a look at how bad the earnings per share growth has been, alongside a number of other alarming factors. In fact, the GDP for the U.S. is expected to come in below 1% this quarter, which is pathetic. And so I do suspect we'll see a pretty quick overnight bounce in the TLT. The next time we get a bad news, that'll push us dramatically up in our portfolio. If we look at this SPY trade all on its own, you can see we've generated 1.5% return in November and a 1% return in October. And so now we're really tightening the option collar, trying to lock in those profits and just play it safe. We had a good run on the SPY, and now I think it will start to top out and again pull back. Emerging markets is up 0.7% after delivering a nice return of 4% in October. And so we'll most likely have the same setup on emerging markets come tomorrow, expecting some kind of escalation in the trade war. Bond portfolios where we've had a little bit of drawdown. Now this portfolio has had some substantial gains and has averaged almost 1% a month. It's up 10.6% in the year of 2019, and in December, that's how we got that nice return. It did deliver 2.2% in our portfolio, and I would suspect that although we may not pick up 2.3% in the TLT to close out the month, I would suspect we can pick up close to that amount and push our total return above 1% this month, assuming that we get a nice spike. So our collar on the TLT currently cuts us off at 141. So if we do hit 141 in the next few weeks on the TLT, that will give us a huge profit boost to our portfolio for the month of November. Precious metals has been in a drawdown, but once again, we're in the big picture that the governments are spending too much money, central banks are printing and lowering rates to buy up that debt. So we've got the two main ingredients for gold to go up. The third ingredient is fear, and I do suspect some fear is coming very soon. So very constructive on being long gold at this point in time. Now we're going down to the current trade alert. First step is to close out Friday's trade. If you didn't take Friday's trade, you would skip this step. Buy to close the 312.50 call, and then sell to close the 310.50 put. So that gets you out of the last position, so you can roll into the next position. And today we've sold the 313 call option and then bought the 312 put. And so the risk reward on this is pretty interesting. you can see our maximum risk is 20 cents a share. And we're not going to realize a profit unless the SPY does melt up considerably higher. So if the SPY were to travel to 313, that's where we'd hit a maximum profit. Well, that's $1.20 from here. However, we would only get to capture 80 cents of that profit. So we're really in a position where if the market melt up continues, we'll get a little bit of that profit, most of it actually, over half. But on the other hand, if we get a sharp sell-off like I'm expecting at any point from trade war escalating, then our TLT is set up to deliver a big gain, and our SPY won't really hurt in terms of losses because we're only going to give up 20 cents a share. Now, the second we do see the SPY actually start to roll over and some catalysts coming out, expect for us to use that inverted option collar to profit from the SPY traveling lower. So we might have a really nice return on the SPY ETF for the month of November. Okay, moving to the topical content, we've got a lot to review here, collected from Friday through today. To me, this signals Trump is about to give up on trade talks. Now, I know he really wants a trade deal. It would really help him win the next election. But China knows that. Michael Bloomberg and his different indexing products have funneled billions and billions of dollars into China. Plus, Bloomberg does receive a whole lot of advertising dollars from China. Now, does that necessarily mean he would run a political campaign that was positive on China? I don't know yet. We really have no idea what he's going to run on. But we do know Joe Biden is definitely connected to China. His son took a $1.5 billion investment to go over the U.S., buy up tech companies, and export them to China. So that's what this whole mess with the impeachment is revolving around. And so I think China's going to just drag their feet until Trump eventually gets upset. So here's the tweet that really perhaps is signaling trouble ahead. Our great farmers will receive another major round of cash compliments of China tariffs prior to Thanksgiving. The smaller farm and farmers will be big beneficiaries. In the meantime, as you may have noticed, China is starting to buy big again. Japan deal done. Enjoy. So China's not buying big again, and most of the agricultural products they bought were just to feed their pig herd. But their pig herd has dropped by 80% from African flu swine. So it's going to take China a long time just to get back to the 2012 levels of $25 billion, the most they've ever purchased. Meanwhile, Trump's boasting this $50 billion figure. Now, China did purchase $120 billion in agricultural last year, so that's what Wilbur Ross and all these guys are focusing on. But that would force them to remove a whole bunch of deals they already have in place and cause China a whole mess of problems. So this is looking less and less likely, and Chinese even threatened to reduce their purchases if we don't roll back tariffs. Okay, Trump still wants tariffs in place. Deal was supposed to be done this weekend. Comments at the New York Economic Club were not fully appreciated. So Trump went up there and called China a cheater and all kinds of things. Meanwhile, Hong Kong continues to get out of control. Here's a photo from the weekend. There's several hundred students trying to guard a internet hub at a school, which it's unclear what exactly happened over the weekend. It was happening last night. Police were surrounding the university, and these students were throwing Molotov cocktails at them and shooting them with arrows and all kinds of crazy things. Meanwhile, the Fed, ECB, Bank of China, and Bank of Japan all grew their balance sheets in dollar terms in October. That's the first time this has happened since July of 2017, and they joke because of strong fundamentals. Rabobank global debt increased by $7.5 trillion from January to June in 2019, even as global growth showed a synchronized slowdown. Where did the money go? Into assets, of course, which is why they are frothy and all else is not. Another signal that trouble is ahead. Trump had been ordering everyone to keep quiet about the violence in Hong Kong, including the first unarmed person who was shot and killed. But this weekend we did get alert. U.S. are monitoring events in Hong Kong and condemns unjustified use of force, urges all sides to refrain from violence. Now in Hong Kong they have a law that if you're protesting and rioting, you can get 10 years in prison. Why is the Hang Seng up 1.2% at the session high after warlike scenes from Hong Kong? Well, the Bank of China injected, I think it was about 180 billion CNY. So divide that by 7, so about $20 billion. And they've dropped their rate, first time in quite some time. So they are showing some willingness to inject credit into their economy right now, which they had been kind of dragging their feet. Campus standoff between Hong Kong police and PolyU students enters the second day. Goods barometer suggests world trade to remain below trend as tensions take toll. This is the Chinese phone shipments, down 5%. You can see it is slowing down. One positive note, although Wilbur Ross has explained this is only related to 3G and 4G technology. They are going to try to blockade Huawei from taking over the 5G market. Trump administration is set to issue a 90-day extension of a license on Monday, allowing U.S. companies to continue doing business with Huawei. Market reaction to trade discussion has been asymmetric recently, with a stronger reaction to any slightly positive news and no reaction to negative. What if, drumroll, the market is not responding to trade discussions but to QE4? Meanwhile, China quietly bails out another bank with 620 billion yuan, which is, again, that's a lot of money. That's about $90 billion. This perhaps is connected to the repo madness, which is now lending $180 billion overnight on a rolling basis on a 1-day, 7-day, 14-day, and 28-day loans from the Fed to primary dealers. And what they're doing with the money, who knows? They say they won't even talk about it for at least 2 years, as it could cause a bank run. So there's some big losses that are being hidden from the market right now. I wouldn't be surprised if a large bank goes belly up with very little notice. And again, that would be highly bullish for the TLT and potentially cause a scare in stocks. Mood in Beijing about trade deal is pessimistic. Government sources tell me China troubled after Trump said no tariff rollback. China thought both had agreed in principle, strategy now to talk. But wait, due to impeachment, U.S. election, also prioritize China economic support. Here's some Hong Kongers with their Molotov cocktails. This is absolutely unbelievable. And not the first time Hong Kong has done this. So they've been fighting for their rights for quite some time. It seems like about every 4 years there's a major protest. Recent violence in Hong Kong is mostly committed by masked rioters. Hong Kong High Court's ruling is encouraging rioters, dampening police motivation to maintain the remaining shaky order in Hong Kong. As an international financial center, Hong Kong is dying. High Court shuts the door of the emergency room. So this is a big problem for China, as it's their hub for raising capital to continue their debt binge, which is growing at a much faster rate than any other country, including the U.S., and will quite likely cause the next major global slowdown, recession, and perhaps even a depression if you believe all the information that Ray Dalio has been putting out. It seems Hong Kong's police have encircled the main force of rioters in the Polytechnic University. Please arrest them, and in accordance with the law, they are a new type of terrorists who have hijacked Hong Kong's future and threatened to kill the city. Hong Kong police use controversial anti-riot sound device for the first time. Hong Kong police given green light to use lethal force. China's defense ministry calls on U.S. military to stop flexing muscles in South China Sea. China's defense spokesman. Now, they had promised Obama that they weren't going to be doing any militarization of the South China Sea. 8 years later, they turn their head and allow them to build massive naval and air force bases all around the area, even creating islands. So that's continuing. Here's a look at the deposits of China's yuan against the dollar. Now, our economy is at least twice the size of theirs and probably a lot healthier. We have a capitalist society, so typically when a company's losing money, they go bankrupt. Now that has been somewhat skewed because of the Federal Reserve and 0% rates over the last decade, but it's not nearly as bad as what's been going on in China, where they have numerous cities the size of New York that are completely empty, and they have over 50 billion houses they've built that are just rotting away, crumbling away with no one living in them. So they have really pushed the limits on printing money and taking on debt. And so now it looks like they are in a sharp decline. The two sides had constructive discussions on each other's core concerns in the Phase 1 deal and agreed to maintain close communication. Go back to sleep. Have a nice weekend. That was Robert Lighthizer with a call this weekend. Probably the biggest talk. Here's a look at the forward PE multiple. So we're headed towards a multiple of 18 times. Now over in the rest of the world, we're at more like 13 times PE earnings. So this is getting way ahead of itself, and all in hopes that a trade deal will fix the global slowdown. And for those of you who say stocks follow earnings, in 2019, U.S. earnings per share are down for the year, and the S&P 500 is up 24%. With 92% of the companies in the S&P 500 reporting, the blended earnings decline for the index for Q3 is negative 2.3%. Meanwhile, Q4 earnings per share is now also projected to be negative, as the S&P 500 is now knee-deep in an earnings recession. You can see we finally jumped into negative earnings growth. Meanwhile, the different Fed branches are predicting very low GDP prints for Q4, which is why we're seeing the Fed rush to print money, lower rates, and try to keep this going. In the long run, equities follow earnings. This is from the long view. Equities are reflecting expectations for a breakout in earnings growth after 18 months of nothing. We will know soon enough if such hopes are warranted. And so you can see the earnings per share in this line, and then the jump in the last price above. So it's way ahead of itself, predicting a massive jump in earnings growth. Biggest event this week will be the FOMC minutes. Most likely they'll say we're going to be patient, and then all they do is wait for bad news and then cut the rates. But I do think they want to try to slow down cutting the rates to at least every 3 to 6 months so that they can make this bond rally last for at least 2 years, in hopes that we can get GDP above 3% and start decreasing the deficit. So that's their hope for a Hail Mary save for where the situation is at right now. For us, that makes life pretty simple. We know to be long the TLT as well as the SPY, but look out for bad news to create some panic. Meanwhile, this is a statement from Chair Powell's meeting with the President and the Treasury Secretary. All I wanted to highlight was that they had a private meeting, and so most likely he's going to warn them of what's ahead and hope that he will support the banking system, which of course that's what the Federal Reserve is there for. They're owned by the banks, which most people don't know. They think it's some sort of branch of the government, and it absolutely, positively is not in any way, shape, or form. It's completely owned by these big banks. Okay, Goldman Sachs risk appetite momentum indicator hit an all-time high. What comes next? I think you can look at the picture and figure that out. Now, this is just mind-boggling. So people wonder, how does buying back your own stock make your earnings per share go up? Well, there's less shares outstanding, so the profits get delivered to less people, and that's how Apple's been able to almost increase its value of its shares by 50% since the bottom of that December crash. So it's just skyrocketing higher, and it's pretty much from, it says at this rate, Apple will fully be able to buy itself out by 2030. There won't be any shares left because they will buy them all from themselves. And they're doing it by, well, they are highly profitable, but they're also able to get almost 0% rates on their bonds to turn around and buy their own shares back. It's madness. Bank of America once again points out that the blindingly obvious not QE is in fact QE. Powell's 2019 rate cuts and QE is a success. Fed now on hold, but QE remains supportive for risk. The Fed plus ECB will buy $420 billion in assets in the next 6 months. Meanwhile, global trade went to a negative. And a lot of times, if you go look at smaller markets and they start to pop, that's a good warning sign that you're getting near a top. We saw this with Bitcoin crashing, then emerging markets crashing, and then finally the U.S. crashing in 2018. And now they've come to rescue it with QE and rate cuts. But now we're seeing marijuana stocks go up in smoke amid disastrous earnings. Good old Cheech and Chong photo. Now we can see in this chart that the 2019 return, which is this blue line right here, is set to have the greatest return of all time for the S&P 500 in the last 2 decades. And this is during a period where earnings growth is slowing down, China's GDP is crashing, so it's completely based on the banks getting bailed out. They've now pumped in the overnight repo about $180 billion into the banks, which bought out bonds at a massive profit for good old JP Morgan, and now they're massively pumping up stocks. And this is all the big primary dealers, not just JP Morgan. So it makes absolutely no sense. But that's the world we live in, so that's what we pay attention to. When your biggest mover of the market is your central bank, that's your core thing to study. And so we have a pretty good idea of what they have in the cards for us. Lower earnings expectations, higher markets, 2012 through 16 all over again. With repos going from daily to including 14-day operations, only to see those oversubscribed, and now seeing 28 and 42-day operations, can we just admit that either primary dealers don't want to prop a large fiscal deficit, or that the U.S. government can't find foreign buyers of U.S. treasuries to fund deficits? And there's an interesting piece. They're supposed to be buying old treasuries, but now they're buying about 10% of all the new issuance, and they're not allowed to buy it directly from the government. So what's happening is we have the primary dealers coming in, buying up these treasuries, and then flipping it the very next day to the Fed. It's not supposed to work that way. And so meanwhile, the banks take a nice sweet profit on this guaranteed flip. It should be a crime. Global debt to end 2019 at a record high of $255 trillion, 330% of world GDP. So that's why you understand that the TLT must travel higher, otherwise we have a massive financial crisis in our hands. It's coming, but the question is when. They still have some ammunition, so they can still delay it. They have about 150 basis points of rate cuts they can do, and probably a couple $1 trillion of QE before the bond market really gives up. Now, what could save the day? Again, if we can start creating GDP growth greater than our deficit growth, we can get this aimed back in the right direction. But right now, we're increasing debt at a faster rate than we're increasing GDP, and there's a whole host of reasons why that's happening. But unfortunately, I think the only real solution will be to jack up interest rates, let a lot of bad businesses go belly up, and then have a nice reset. Now, here's your global debt a decade ago, and you can see just how massive it's grown. So if you think the 2008 crisis was bad, wait till you see this crisis when it unfolds. VIX non-commercial net speculate is at an all-time high. Everyone's shorting that VIX. In our boot camp, we have one long VIX position, and we'll be adding to it this Friday. Absolutely, so expect that if you're a boot camp member. Here's your S&P 500 next to the liquidity proxy. So the market is not letting people evaluate the profitability of companies right now. It's just madness of the central banks printing money and distorting reality here. Everything's working in the opposite it should be. Meanwhile, here's the projected central bank purchases. I think we can count on most of that except emerging markets. If China wants to create a slowdown, they absolutely can. All they need to do is stop creating debt, stop printing money, and allow their economy to slow down, probably to a more realistic 1% to 2% growth rate, and try to get all the malinvestment out of their economy. If they do this, quite likely we could see a recession worldwide by the time we're in that election. So that's kind of what I'm expecting they may do if Trump's not willing to essentially cancel the trade war. That's what they put in their wording. The trade war's over. We're going to forget about it and go back to exactly how it was, with a little bit of language that we're going to stop stealing from you, but with no change in Chinese law or any real way for you to really enforce it. So it's a big hoax. There's no way that deal will fly. So I do suspect some trouble ahead. Meanwhile, a little more attention to Epstein's death. It's very curious how quiet both sides of the aisle were in dismissing this as a suicide. Pretty much everyone knows that, the first time he got let off, the guy in charge said he was an intelligence officer and out of bounds for any kind of prosecution. So it's very curious what exactly he was doing. Supposedly he'd made all this money from investing, but all the top dogs out there have never heard of him. No bank has heard of any trade deal he's done. And a guy named Harvey Weinstein did an interview with him. He didn't know what he's talking about. Called him a fake and a fraud. So it does seem like he was potentially doing some work for the government, creating blackmail against powerful leaders. But that's my best guess. And now we're seeing House Minority Leader demand ABC explain why they shelved the Epstein story. That went viral from, what the heck was that little website? There's a website that just goes undercover. Veritas, Project Veritas came out with this about 2 weeks ago. So now that's coming up in Congress. Never has the Republican Party been so united as it is now, 95% approval rating. This is a great fraud being played out against the American people by the fake news media and their partner, the do-nothing Democrats. The rules are rigged by Pelosi and Schiff, but we are winning and we will win. So this is all heating up in terms of the impeachment. I think Thursday is the big day with their star testimony. So we'll see if this creates any chaos in the markets. So far, obviously, it has not. Elizabeth Warren, my plan to pay for Medicare for all will cover everyone, cost less, and put $11 trillion back into the pockets of American families. Interesting. Our whole GDP is only $25 trillion, so that's half of that right there. And no family will ever go broke because of healthcare costs again. Imagine how often people are going to be going to the doctor if it's free. They'll be going there if they just think they're sick, not even feeling bad. Everyone in America should have a decent, affordable, and safe place to live. We need to tackle our housing crisis head on. And I'm ready to fight for the big structural change renting families need. So it's interesting. Michael Bloomberg is out there ready to pump who knows how much money. He's already put $100 million into anti-Trump ads in swing states. But can he pull the same kind of numbers as someone like Elizabeth Warren going out there promising free stuff to poor people? That's a big question on my mind, and I'm not quite sure what the answer is to that. My plan to rein in Wall Street will hold private equity firms accountable, and I'll stop the federal dollars from going to predatory landlords and lenders with a history of harassing tenants. She's on a housing rant today. Meanwhile, get the daily, or at least the hourly update from Trump. This was the Iowa poll. Pete Buttigieg is in the lead. This is a huge breakthrough for him, and very, very interesting. Warren in second place. I'm surprised Biden's still hanging in there with all the nasty facts coming out about him and his son. And Sanders always polls well. So last time, the Clinton team really stabbed Sanders in the back because I think he was going to take the primary away from him. Meanwhile, everyone else is really struggling. Bloomberg here at 2%, but he hasn't really started promoting himself yet. He's kind of letting all these people knock each other around and then jumping in last minute. And meanwhile, there's rumors that Hillary may jump in too. Now, this is alarming. YouTube to delete all accounts that aren't commercially viable starting December 10th. They've been known to censor lots of content. If you listen to any YouTube channels that talk or criticize China, particularly, they've all discussed how their subscriber growth has gone to zero. Their users are reporting that they don't see the news feed, and they're seeing that their ads have been demonetized, so they're not getting any kind of income from the content they're publishing. So this is a slick way to do censorship. Now they're going to start deleting accounts. So that's very alarming. And I got to be careful what we say about that as well, because we do a daily YouTube stream. Poor Kamala Harris and Cory Booker. Deval is ahead of both of them in the betting odds, which have been more accurate than polls. Deval Patrick has joined the race for the Democratic nomination. Who, you say? How many donors is this guy going to get? The Democrats are in utter disarray. And now this is coming out. Internal documents about organ harvesting, and as well these concentration camps. Spent a lot of time reading about that. They've got a whole system for these kids who come home to find that their grandparents and uncles and fathers are now imprisoned in these camps. And what they're trying to tell these people with police officers dressed in civilian clothes to calm them down and to not riot. Okay, now Roger Stone was convicted of lying. Trump says, so now they convict Roger Stone of lying and want to jail him for many years to come. Well, what about Crooked Hillary, Comey, Strzok, Page, McCabe, Brennan, Clapper, Shifty Schiff, or Neil Steele? I think these guys do have some trouble coming for them. So we'll see if they can get through the crooked government officials who are protecting them right now. What's a man supposed to do to get some votes around here? Andrew Yang says, I'm literally trying to give everybody money. All right, we're at the end of our presentation. Here's our charts. Here's that SPY ETF. Don't forget who predicted the 315 back when we were at much lower levels. We're a couple dollars away from that. Emerging markets prediction has been a little slow. We hit a nice gain last month, but this month has been a bit of a letdown, which does signal to me that China is not wanting to play ball, and we're seeing pessimism around emerging markets. Now, what's odd is that the amount of money that's flown into the SPY is pathetic. It's less than you get in summer months, even in half trading days. And most of the jumps have been overnight gaps. So if you're an intraday trader, you missed out on all of that. Meanwhile, emerging markets has had a lot more money float to it, and it's really sagging. So this is not a good sign. TLT, again, we've talked about the big picture. Really, if the Fed were to stop artificially protecting the bond market, TLT would crash much lower tomorrow. I'm talking down to $50 because yields should be well above 5%. But instead, they're going to try to blow this bubble as big as they can. So I do think we have considerable upside in the TLT for probably as much as 2 years. Everybody knows, though, the lowest that they can go is to 0%, and we're at 1.5 to 1.75. So trying to time just how low we can go before the bond market freaks out might be a little tricky. But for now, we definitely have several more catalysts ahead where the Fed drops rates and the TLT goes higher. GDX is very correlated to the bond market right now, but I do think they will break path as soon as we get towards that zero line, and that's where gold can really have its heyday, and most likely we'll see bonds have a temper tantrum and sell off. Meanwhile, as long as LQD is at this high level, the corporate buyback scheme will continue. So even though I am expecting a sell-off in equities, this is a short-term sell-off where we play the violence, we play the volatility spike, and then we get ready to buy the dip. You don't want to be short equities when there's free money being massively handed out to banks, and also that will continue to push GDP numbers and keep this bubble growing. So until we see a really, really financial catalyst that really scares and panics everyone, and we start to see the credit markets crack, it's going to be a short-term sell-off in the SPY and a good buying the dip opportunity. The Chinese currency is another play for our boot camp members, and our goal will be to short the yuan as soon as we see the trade war escalate. So I do think that moment is coming, and so expect Friday a VIX play and potentially also a sell order to sell CNH against the dollar, predicting that this will escalate. So we'll see if we're going to push that or not, depending on what the news looks like. But it has sold off considerably down to that 7 line. And the only thing that I really think could push it much lower would be if we rolled back tariffs. The whole reason they've been devaluing their currency was to offset tariffs. So as soon as we get a high conviction that Trump will not roll back tariffs, this is a great entry point to be short their currency. Now, if you listen to Kyle Bass, he thinks a more lucrative play is the Hong Kong dollar. There's just about no risk that they will tighten it because they're already running out of money to protect this conversion rate as it stands. But if they were to let it go, this could really, really devalue very quickly. So we can also play that in our portfolio. But once again, these two are highly correlated in terms of the root cause. So we do want to see more pressure applied before we go to that route. Here's a chart of gold. It may have trouble getting above 1,500 until we get some massive panics. We start getting towards that zero bound on the rate. But the gold miners are making out like, hey, as long as we're above 1,400 and near 1,500. So that's why we like the gold miners at these elevated prices. They can actually make a profit. Crude oil is starting to pick up a little bit. Anywhere between 58 and 65 is a pretty healthy range. If we go below 58, I'll be very concerned for our stock portfolio. That would show massive slowdown in growth. But meanwhile, if it starts to get above 65 and pushing towards 70, we're going to have inflation fears. So that would be negative for bonds until that creates a repeat of 2018. So to reiterate what happened in 2018 is that 10-year yield hit 3%, and that's just too hard for banks to turn down. With an inflation rate expected below 2% or around 2%, they can go leverage into a guaranteed 3% a year and make a ton of profit with that. So that's what happened in 2018 and caused your Christmas massacre. Here's the German bond, a 30-year. This is our best measurement of what's going on in China as they are key trading partners. And so I think this is a little dead cat bounce and going back into negative territory on the next bad piece of news about the trade war. Finally, the 30-year Treasury, very similar chart as you can see, but in general, the German bond is in a downward slope, and I think it's going to push much lower, which will drag all the bonds around the world with it, including our TLT, which means TLT goes up, yields go down, bond prices go up. Meanwhile, while we're printing money like it's at a faster rate than QE1, 2, and 3, plus lowering rates 75 basis points, you think it'd be weakening the dollar, but no. Problems abroad are much worse, which keeps the dollar very strong. So think about that $220 trillion in debt. Most of it's denominated in dollars, so all these countries are forced to print money in their currency, exchange it into the dollar, and they're just using that to pay these outlandish debts. So that continues to push the dollar stronger, and we're back to potentially, with just a little shake, give China a little shake from the U.S., that will weaken emerging markets and create another flood of money into the U.S. Is what I'm expecting. And funny enough, if we did create a trade deal with China, it actually might be negative for U.S. equities. We're already at very high valuations, and really a big supporter for the U.S. has been all this foreign money flowing into the U.S. Because their environment's so poor right now. Meanwhile, still long Bitcoin and Ethereum, and these are still at very elevated prices. We got our numbers in December, and that was at 3,500 Bitcoin and around $50 on Ethereum. So we've had a huge run up on that. But again, this was with a tiny part of our portfolio, 2%. All right, guys, that's a wrap for today's promotion update. And don't forget, if you do call Dean, you can reserve your spot in our advisory at 505-322-7515 and save 60% today only.